This is a very serious time. This is a financial show. And the title of this show is Discern Wisely. And then what do you need to do? You need to take smart action. So, you know what I'm doing today? So let's go back to the basics. I'm giving away Dave Scranton's newest book, which is an edit from his last book. So I'm going to just show this very quickly. So let's do for you, I'll say, call it reading left to right. So this book, The Retirement Income Story, is a great book in and of itself. And The Retirement Income Source is the edited version. I think you want to make sure you get it. It's a great book. He has added content that I think gives a better balance. He thinks it gives a better balance. It reflects, by the way, the new book, The Retirement Income Source, which I'm giving away today. We have it. And I want to encourage you to come and either to the office or call and get a copy. Call us on 225-831-1394. That's 225-831-1394. And ask for the book, The Retirement Income Source. It's the name of this radio show. And what's that about? Well, in retirement, you need income, but you should understand what's the source of your income and how you get income. Because too many people are going to get income from a declining market, or they're going to get income from low yields, and they're going to end up having a problem selling shares. This book is going to help you understand how you can have a balanced portfolio, how you can invest for income, how you can get high yields, and how you can have the peace of mind in retirement so you can enjoy your retirement in the best way. But again, today, I've just spent a whole lot of time talking about politics and how we have to get that right. Yes, responsibility, discernment, and action, it's all important. It's your money, it's your retirement, and it's your life. Well, it's a long first segment, so hang in there as I start to talk to you about your money, your retirement, and your life, and how you need to get it right fundamentally by investing for high yields. And we're going to talk about that. We're going to talk about what people are doing not good versus what does work and what does make sense, and how you get the job done and what you have to do to get it right. Okay? You don't want to miss any of that when I come back after the break. Thanks for being with me this morning. You're listening to The Retirement Income Source. I'm your host, Drew Pelton. Stay tuned. I'll be right back. Thank you. Welcome back. You're listening to The Retirement Income Source. I do want to say, in life, we need to take responsibility. We need to discern. We need to discern wisely. We need to do it based upon facts and intelligent information. And we need to do something relative to money and finances that is, I think, the only way to go, which is fundamentally and foundationally, you must let the math be your guide. Because if you let the math, the arithmetic, if you let the numbers, if you let the performance, that's what it is. Performance in finances is measured by numbers. And we're not talking about comparing mutual funds to mutual funds. We're not talking about comparing ETFs to ETFs. I'm saying overall, what are the results? What is the performance? How are you doing, or are you not doing? Do you know how to judge the math? Do you know how to do the math? Well, most people don't, and I understand that. You're listening to The Retirement Income Source. I'm your host, Drew Pelton. I'm giving away the book today, The Retirement Income Source by David Scranton. It is a great book that is new. It's new in its by way of the fact that it's an edited book from the Retirement Income Story. And the Retirement Income Source is not just according to me and what I believe, but even Dave and what Dave Scranton's purpose was, which is to build in a little more balance, because his first book was sounding very much anti-stock market and only bonds. I got that feedback from certain people, which was not the case. He didn't say that. But I'll say his message and messaging in the Retirement Income Source, and for those who can see it on the podcast, holding it up, and it's a great edit. It's a great balance. If you haven't gotten a copy of it, I would recommend reading it. And I know many of you listening in have read his book, The Retirement Income Story, but read this book, The Retirement Income Source. Interesting, right? What's the name of my radio show? The Retirement Income Source. Oh, what's the name of our group, our branding name around America? The Retirement Income Source. Interesting. The name of the book, The Retirement Income Source. Let me give you a couple of other names that you're going to hear the consistent one name throughout. So the umbrella group that we're part of, Sound Income Group, okay, which is the umbrella name corporately. And under that, we have Sound Income Strategies, our fiduciary money management group that focuses on managing monies for high yields, and then our marketing name, the Retirement Income Source. And it's all income. You know what? It's all about income. It is all about income in retirement. It's all about income, 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 income. When you need income, you want to get income that you need to live on from income from your investments when it's high income, high yields. That's the message. That's the takeaway, because that will drive your preservation. That will drive your stability. That will drive mitigating, lessening risk and volatility. That will give you added growth deliberately without having to take the low lows. You may not get the high highs, but you're going to have more consistency, and over time it actually works well. You need to know how that works, and you need to understand total return equals income plus growth. If you want to have a stress-free retirement, invest more or focus more in your investing for the I, and focus less on the G, because when people focus too much on the G, the growth side of their assets, where they're trying to get returns simply out of growth, what happens is they may eke out a little bit. Notice I said they may. They don't always. They may eke out a little bit more in return, but a lot of times when the markets crash, you're going to have a much lower low. And when you're in retirement, wouldn't you agree you need more stability? So today I am talking about discern wisely and take action. Discern wisely and take action based upon the facts, the truth. That's fundamentally what makes good sense. Wouldn't you agree when it comes to investing? You really want to have the facts. You don't want to do fluffy. You don't want to do fuzzy. You don't want to do things like fear of missing out. I better hang in the stock market. And you want to understand some of the myths that get people off on the wrong track, such as what? Such as, I must take big risks to make big returns, or buy and hold always works. Buy and hold doesn't always work in a down market. And when you're in retirement, buy and hold may be okay and can be okay dollar cost averaging wise when you're adding money in the accumulation phase of your life, and that can work. But if you are retired or close to retirement, you want to make the shift to a fundamental approach of investing for income. So we say, relative to the formula TR equals I plus G, total return equals income plus the growth over time, knowing that the growth could have an L. So the little saying to help you think about what is good and right for you overall, I'll call it qualitatively and thinking wise, is if you want to have a retirement that's stress-free, focus your investing more on the I and less on the G. And when you do that, you're going to have the best of all worlds. Again, preservation, stability, growth, and income that you can live on, where you are living off of the income from your investments and not invading principal. The big question is how do you do that? Well, you can't do it in a good, sound way if you are doing it with low yields. This is so fundamental. So when I say, by the way, let the math be your guide, it's so basic. Okay, here's the basics. If you can get 5% net in a yield versus 1 or 2% in a yield, or even 3 for some of the do-it-yourselfers that may get 3. I mean, if I take 5% in a yield, and that's the income part of the investment, not the growth part of the investment, not the capital appreciation. If you get 5% versus, I'll just say more, and for most, it's 2%. So I'm going to use the 2% because most people are not getting net 2%. And when I say net, I'm talking about after fees. So in our portfolios, it is normal that somebody is netting at least 5% in yields. So let's take an easy, if I take an easy number of a block of money of 100,000, which typically is not a lot of money in terms of a retirement nest egg. Well, $100,000 throwing off a 5% yield, that's $5,000. Well, if you are only getting 2% net, well, that's only $2,000. Let's just take that to $500,000 because many of you listening in have at least $500,000. Well, 5% of $500,000 is $25,000, and 2% of $500,000 is $10,000. So those of you that not good with math, I'm giving you the numbers. Well, let me just ask you a question. Let's say you walk into the boss's office, and most of you are listening in are probably retired, but let's just, as an example, when you were working, maybe some of you are, and the boss says, okay, we're going to give you a raise, and you have a choice. Tell me which one you want. We're going to give you a $25,000 raise. Now, by the way, I know most of you didn't get a $25,000 raise, so, but many of you are thinking, yeah, Drew, I wish I got a $25,000 raise, but hear me on the analogy, okay? So you go to the boss, he says, look, we've done well this year, and you have a choice, and it's just really straightforward. We can give you $25,000, or we can give you $10,000. Which one do you want? Well, who's assuming there's no catch and all is the same in both scenarios, you're going to take 25,000. It's almost ridiculous the analogy, but let me bring this forth to you with respect to when you're investing in retirement, because now you're not working and you don't have a boss or a job or even a business, as an example, that's quote unquote giving you more of a raise, more profits, et cetera. You have yourself and you have your money, and you have the choice of working with an advisory firm that invests in high yields or one that doesn't. And if you could get, in the scenario here, 25,000 versus 10, why would you not choose the 25,000? The problem is, in this world, there's so many people either have their head in the sand, their head in the clouds. They have excuses such as, well, I just didn't know, or, I just thought the bank gave me the right thing, or I went to the brokerage firm and they seem like they're good guys. Everybody I know works with this advisor. Everybody I know works with this firm. We went to church together. We go to church together. We grew up together. I need to tell you, those things are qualitative, good, okay. But the reality is that it's your money, it's your retirement, it's your life. And the math should be your guide. Because who in the world doesn't want the larger number? In the example I'm giving, 25,000 versus 10. And some of you have $1 million, and the difference in that is 50,000 versus $20,000. I mean, this is huge in terms of not only the lifestyle you can live, but also the amount of money you can accumulate. And many of you live very conservatively, and the biggest fear and concern you have is long-term care cost. And so you want to be very attentive to the needs of both the lifestyle you can live when you're in the go-go years, but as you get older, you want to make sure you have adequate assets. And I know 95% of people do not have long-term care insurance, and they're going to have to fund their own long-term care, and you're going to need money for that. And if you are married and two of you were in a nursing home at the same time or had in-home care, it's huge. It's a huge cost. It's easy to think it's $6,000, $7,000, $8,000 a month for in-home care or long-term care. All of this said is getting the best returns on your money and keeping your money is critically important. Well, thanks for being with me this morning. You are listening to The Retirement Income Source. I'm your host, Drew Pelton. I'm going to take a quick break, and when I come back, I am going to tell you some stories about what works and what doesn't work, because candidly, or when I say that, I mean, I just need to tell you, I never understand how people choose, the example I was given, 25,000 versus 10,000 or 50,000 versus 20. It's amazing to me how people choose the $10,000 and $20,000 when they really have a choice, but they get hung up on all these ancillary types of things, subjective things that get them messed up in their thinking and decision making, and they aren't keeping it simple. They're not keeping it fundamental and foundational, and they don't understand the math. And they don't understand the problems with not following the math of high numbers and high performance to get the job done. You have to know where you're at. I hope this is making sense. You're listening to the Retirement Income Source radio show. I'm your host, Drew Pelton. Again, thanks for being with me. I'm giving away the book today, The Retirement Income Source by David Scranton. It is a great book to help you understand the power of investing for income, how you can get your retirement investing right for you, so you can have retirement investing success, so you can go the distance in peace, in having a peace of mind that'll help you enjoy your retirement better. If that makes sense to you, I'd encourage you to call us on 225-831-1394 or visit us on our website, drewpelton.com. All right, stay tuned. I'll be right back to talk to you about some examples math-wise and some good examples in terms of people making good decisions and people not making good decisions. All right? I'll be right back. Stay tuned. You don't want to miss it. Welcome back to the third segment of the Retirement Income Source as I record this and present this early October 2024. When it comes to your money, and that's what we're talking about here, is discern wisely. Don't make the mistakes of so many people. You know, I have people, they come into my office, they might come to a seminar, maybe they kick the tires, and back to what I was talking about last segment, I was talking about two scenarios of, if you had a choice of getting a $25,000 raise or a $10,000 raise, or I gave another scenario you could make from, let's say, $1 million portfolio, $50,000 versus 20, why would you not take the higher number or let the math be the guide? But I see people and they have a choice and then they choose incorrectly. You need performance. You need successful retirement investing to be part of your thinking and part of your goals and your objectives. You have to begin with the end in mind. And the end in mind really begins with today. It begins with ongoing responsibility with respect to your money. You want to be doing what's good and right for you. It is your money. It is your retirement. It's your life. And you want to get it right for you. You want to understand the power of investing for income. I've got Dave's book here, The Retirement Income Source, The Ultimate Guide to Eternal Income by David Scranton. The Ultimate Guide to Eternal Income or Renewable Income, Residual Income, Reliable Income, Dependable Income, the Retirement Income Source book. It's a great book to understand the power of investing for income so your money can last, so you can get income from the right place from your portfolio. What's that right place? Everybody should know if you're listening in. What is it? So you can say it, right? Alone. You should say income. I could hear Karen, my wife, listening in before I said it here. I'm guessing as Karen listens in, she said it already. She knows. She knows it's all about income. She knows it's all about yields. And my wife is not the financial advisor, but she's smart enough as an investor herself that she understands the power of investing for income to get good and great and high results. If you'd like to get a copy of Dave Scranton's book to help you understand the power of investing for income so you can get eternal income, residual income, reliable income, give us a call on 225-831-1394. 225-831-1394. That is our office line. We're happy to get this book right out to you. So, one of the things that I see happens, back to where I see things that don't work, is I'll get a do-it-yourselfer. They come in and I'll talk to them. I'll actually demonstrate how we're generating 5 to 7% in yields. I'll talk to them about we have the universe of choices. I talk about our 100 offices, our fiduciary approach, et cetera. And then I see a lot of times the do-it-yourselfer says, yeah, but I've been doing this myself and, I'm okay. I'm all right. I'm not doing too bad. And, I had an analysis and somebody said I'm doing better than the other guy. I need to say this. The standard is not the other guy. The standard is the standard. It's the Michael Jordan. I heard him say it on, I'm pretty sure it was called The Last Dance. Some of you better sports fans than I'm a sports fan, but I think it's 30 for 30 is what ESPN created, and I think it's called The Last Dance, which had to do with the whole thing with Michael Jordan and the Chicago Bulls and that dynasty, et cetera. If you understood that, by the way, it's basketball. For those of you listening in, some of you might be listening in and say, "Who's Michael Jordan? What is he talking about? Chicago Bulls." So, of course, many of you know exactly what I'm talking about. But what did Michael Jordan say? I'm not quoting him, but for the most part, what he said is when somebody was asked, "So Michael, who's your greatest competition?" He said, "My greatest competition is the highest standard possible," and it's almost impossible to achieve. And so I believe in life, in retirement investing, do the best you can do. That's the point. So if you're a do-it-yourselfer and you're getting 3.5% in yields, well, I think it's a major mistake. I really do. I don't know why you would do this. To say, well, I'm okay. I'm not doing too bad. Everything's okay. I'm doing better than all those other advisors. Well, but let me tell you what the standard is, I believe. The benchmark, it's 5 to 7% in yields for preservation, for growth, for income. And you want to, particularly if your spouse is not very much involved in finances, you want to be working with a fiduciary firm that can get the job done. If you'd like to talk to us at some point, I'm happy to talk with you. 225-831-1394. And maybe you're not a do-it-yourselfer, and maybe you're just investing and you want to understand how to do it right and how to have successful investing in retirement in your portfolio. It's your money, it's your retirement, and it's your life, and you want to get it right for you. Invest for success by investing for income. That's what our clients do. And they have residual money that they can take out of their portfolios without invading principal. That's what you want to do. That's how you have peace of mind. That's how you have comfort and confidence. All right. Thanks for being with me. I'll be right back. Thank you for being with me today. You are listening to the Retirement Income Source. I'm your host, Drew Pelton. Thanks for being with me if you were the entire time. Relative to your money, do what's good and right for you. Invest for income. Thanks for being with me this morning if you're listening in by radio, or thanks for watching the YouTube channel, the podcast. We are just starting this and over the last month or two, so we'll have more podcast sessions. I've been on the radio for a good number of years, and now the podcast should help us reach more listeners. So we help you. That's what's most important. Again, thanks for being with me. Be with me if you're listening in by radio on WJBO iHeartRadio every Sunday from 11 a.m. until noon Central Standard Time. And if you're listening in to the YouTube channel, our podcast, you can do that anytime. Be smart, be wise, go vote, listen in each and every week or anytime you can. And I want to say thank you. Be blessed. Have a good and great day.